Alector, ticker Alec, just went through a biotech investor's worst nightmare. Their promising phase 3 trial for a frontotemporal dementia drug, 𝗚𝗏𝗚𝗏, failed. The market's reaction was brutal and immediate, with the stock plummeting over 60%. Investors who were betting on this late-stage drug suddenly found their hopes dashed, and the company's valuation took a massive hit. So is this the end for Alector, or is there a hidden opportunity in the wreckage? Let's break it down. Before this news, Alector was valued at around $900 million. Now, it's hovering between $300 and $350 million. This isn't just a price drop. It's a fundamental reevaluation of the company's entire future. My discounted cash flow models, which previously suggested a share price between $8 and $10, now point to a fair value range of about $2.80 to $4.20. That's a steep drop, and it reflects the new reality: lower revenue expectations, delayed timelines, and much higher perceived risk. But Alector isn't a one-trick pony. The company still has a diversified pipeline and, crucially, partnerships with two pharmaceutical giants, GSK and AbbVie. These collaborations are now the lifeline for Alector's future. The most important one to watch is the GSK partnership for 𝗚𝗏𝗡𝗏, a drug targeting Alzheimer's disease. We're expecting early phase 2 data in late 2026, and this will be a major catalyst. A positive signal here could be the first step in restoring investor confidence. The AbbVie partnership also provides stable funding for research and development, which is critical when you're not generating any revenue. So what does the financial picture look like? Honestly, it's not pretty for the short term. The company is expected to keep losing money until at least 2027, as it pours cash into its remaining research programs. A best-case scenario might see them break even by 2029 or 2030, but that's a long way off. The good news is their cash position. As of mid-2025, they're projected to have around $650 million in liquidity. This gives them a runway of about 2.5 to 3 years to realign their pipeline without needing to raise more money and dilute shareholder value, which is a huge plus in this situation. Now, let's talk about what could happen to the stock price. I've run a sensitivity analysis to map out a few scenarios. In a base case, if nothing much changes and the company just burns through its cash steadily, I see the fair value sitting around $3.50 per share. But if they face more setbacks in their trials, the stock could easily fall to the $2 mark. This is the low-case scenario, where the risk of running out of money and needing to dilute shares becomes very real. However, there's also a high-case scenario. If Alector manages to show promising results from its other programs, maybe with that GSK partner drug, and announces a new strategic partnership, we could see the stock recover to around $6 per share. This would require a significant turnaround in sentiment and a flawless execution of their new strategy. Restoring scientific credibility will be their biggest challenge. So what's the final verdict? Alector has been knocked down hard. The investment story has completely changed from a speculative bet on a near-term approval to a high-risk, long-term recovery play. The next 2 years, from 2025 to 2026, will be all about stabilizing and refocusing the pipeline. Then from 2027 to 2028, we'll be watching for those crucial data readouts from their Alzheimer's and Parkinson's programs. A true revaluation of the company probably won't happen until 2029 or 2030. And that's asterisk if asterisk they can get a drug approved or get acquired for investors. This is a moment of truth. The path forward is fraught with risk, but the current low valuation might present a compelling entry point. For those with a high-risk tolerance and a 5-year time horizon, it all hinges on whether Alector can successfully pivot from its recent failure and convince the market that its other scientific bets can pay off. Thank you so much for watching. If you found this analysis helpful, please give this video a thumbs up and subscribe to the channel for more deep dives into the world of biotech investing. See you in the next one.